Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, I kindly say hi, confirm that you can hear me clearly, then we can proceed. So today is the big day that we have all been waiting for, and this is when we get to see the Federal Reserve Bank of the US announce the interest rate decision. And then on top of that, we also be seeing the Federal Open Market Committee doing a press conference, basically explaining what is expected of the US monetary policy. So there's a number of contentions that we're expecting today. Remember, according to forward guidance from the previous meetings, the market was pricing in somewhere between 25 basis point hike and a 50 basis point hike, which would be restrictive enough to keep pushing interest rates downwards. And in the most recent data from CPI, we saw US inflation drop for another month to 6.0%. So in this case, we will be expecting a strong rate hike of either 25 basis points or 50 basis points. So on the other hand, we know the story that has been developing of the banking crisis in the US, and this is posing risks to the US financial system. So there's this challenge or the expectation that if the Fed continues hiking interest rates, then it could literally break the banks. So the Fed will be considering several options in the markets. The first option is to continue with the rate hikes and let the Treasury and other government departments deal with the problem. On the other hand, it has the option of maintaining rates at the current level or even cutting interest rates in order to reduce pressure on the banking sector. So we will be following closely to see whether the Fed will go for what we call backstopping of all customer deposits in the US. So backstopping basically implies creating an insurance from the Federal Reserve that covers all clients' deposits. Meaning that if there's a bank run on any commercial bank, then the Fed will chip in and provide sufficient money through a program that they recently implemented called Fed Now. So if this happens, then it basically means that the banks will have the opportunity to use their clients' funds the way they want. And if they happen to take excessive risk, then the Fed would definitely come in and chip in the balance. So besides this, there's also the option of creating a new product after the current crisis is done, where all the banks contribute to a one pool, or what I would call an insurance fund, to make sure that none of them gets to suffer from a bank run. So there's a lot that is being developed today, and this has a very big impact in the markets. So looking at today's data, remember it will be coming up at 9 p.m. There is that expectation that any kind of rate hike, 25 or basis point or 50 basis point hike, would erase what we call confidence in the markets, and we could see a big fall in equity markets. So the S&P 500, the Dow Jones, or the Nasdaq could be trading much lower if we see a strong rate hike. So if the Fed maintains rates at the same level or even goes for a rate cut, then we expect to see the opposite. We expect to see equities going up and the dollar tanking or losing against other currencies. So that's the expectation. So earlier this morning, we had the data coming from the UK, and this is inflation data. I'm sure most of you have already seen this. So the CPI year over year came in at 10.4%, compared to a previous reading of 10.1% and an expectation of 9.9%. So what this means is that inflation is now getting higher, which is a big problem for the Bank of England, meaning that the Bank of England will be forced to do a rate hike on the next meeting. So based on this bet, we have seen the pound start gaining against other currencies. Core CPI, which is a CPI without the volatile items, which is food and energy, was also up from 5.8% to 6.2%. And this is an indication of a worsening condition. And if inflation and core CPI is also rising, then it basically means that the central bank has to do more to react to this. So remember, tomorrow we'll also be seeing the Bank of England issue the MPC official bank rate votes, monetary policy summary, and also the official bank rate. So in this case, if they happen to react to this data that you have just seen here this morning, then there's a good chance that they will go for a strong rate hike, or as expected, they could go for 25 basis points and push interest rate to 4.25%. But then if they get aggressive, then they could do a 50 basis point hike and push interest rate to 4.5%. So that is something that we are largely expecting in the markets. So going forward for the day at 11:45 a.m., we will be looking at a very important data point. And this is the ECB President Lagarde, who is due to speak at the ECB and its Watchers Conference in Frankfurt. So this could also have some potential volatility in the euro pairs. So if you're trading today, right now it's the pound that is trading the volatility. Then we'll be seeing some reaction from the Eurozone. Then most important for the day will be the FOMC press conference. So this is the period when the FOMC members will be doing the press conference, and the journalists will be able to raise questions, get answers. And if they raise critical questions and get good answers, then the market can draw out of insights from that, and we will be seeing some heightened volatility in the markets. So this is also expected to be seen in gold, WTI, Brent oil, all might be having extremely high volatility during the FOMC press conference. So as always, this is not financial advice. It's not a recommendation to trade. It's purely educational to help you understand the key concepts. And now we look at some key price levels in the markets. So UK 100 or the FTSE 100 jumped lower. And this jump lower is after the inflation data was announced. But overall, you can see that the market has been recovering from the sharp fall that we saw for the last couple of weeks. So as you can see, this is Monday, made a very strong recovery, broke the upper trend line. Tuesday went even higher. Today is the first attempt to move back downwards. So pound USD approaching a very tricky area. That is a resistance level around 1.22822. So it's already testing here. If it manages to break, then it could even trade higher. So since the pound is paired against the dollar, then we all focus on the dollar news in the evening. So for now, I would personally would prefer to stay out until it's very clear the direction the dollar is taking. Same case for New Zealand USD, Euro USD, and USD CAD. So USD yen, same story, and then we have gold. So gold formed this head and shoulder pattern and then broke towards the lower side yesterday. And once it got to our target level, I had mentioned that we are targeting this high here, which is now the new support. It bounced really well and then went back down to retest the area. So if gold fails to break this low, then the other idea is to now focus on recovery of gold prices. So remember, this is also dependent on what happens during the FOMC press conference. So shorter term target remains around 1960. But then if price breaks downwards, then we could be having some other targets, including the area around 1914. You can see 1914 is a key price level. It was once acting as a resistance, and then support, and this time it could be another support. So AUD USD has the dollar in it. US 500, as you can see, is trading on a major resistance level on H1. So there is a good chance we'll be seeing some volatility coming from the Fed meeting. So it was a resistance here, also a resistance, and it also along this upper trend line on H1. US 30 trading at a very key level. So this was the price at the beginning of the month on the 1st of March. So after trading lower for oil, made a very strong recovery and it's trading at the same price. and now we'll be seeing some momentum coming from the FOMC press conference. So if you look at the US Tech 100 trading at a major resistance level, so whenever you see a lot of key indices trading at a major resistance level or support level, and this is near a news announcement, then it's a key decision point. Basically means that there's a very good opportunity that the market will move in one direction, and also a very good risk, or a very big and bad risk in case you take the trade and get on the wrong side of the market. So you have to be careful with this. Brent oil made some good recovery on Monday, Tuesday, and today. It's also moving higher. So I'm very bullish on oil personally. So if we happen to see the US printing a lot of money to backstop all bank deposits, then the overall reaction or expectation in the market is that hard assets get valued higher. And in this case, oil could be one such beneficiary. So as for the dollar index, you can see this is 4 straight days going downwards. Today could be a 5th one. So there's a good chance we'll be seeing some further dollar weakness. So everything boils down to the Fed meeting later in the day. And also for USD CNH, you can see that the market is trading within a triangle. So I would probably mark this and look for some form of breakout from this particular pattern. So that's it for today, and I hope to see you guys on the next session. So a very good question. Could you trade sell on the indices in the meantime, or would you wait until the rates news? Personally, I would wait until the news happens at 9 p.m. So far, it's a lot of noise, a lot of people preparing themselves for the news. So the big move is expected to happen immediately after 9 p.m. So I expect a majority of the volatility to happen then. So it makes a lot more sense to be patient and wait. So that's it for today. I hope to see you guys on the next session. And thank you, Chris. Can you consider adding GJ in your daily chart analysis? Definitely, I'll do that on the next episode tomorrow at 11 a.m.